Hello and welcome to The Flying Frisbee with me, Dominic Frisby. And today it's my pleasure to welcome to the show a man who was introduced to me by the illustrious comic Simon Evans. He is a private investor, he is a trader, and his name is Danny Solomon. Danny, hello, sir. Welcome to the show.
Hi, thank you very much, Dominic.
So we had lunch before the show began, and immediately we started talking about markets, and we sort of hit the road running. So that's what we're going to talk about today, markets. And the big question I have is, are we in a commodities super cycle or not?
Difficult to say. I believe that we probably are on taking all things into account. I think the world is changing rapidly, especially in regard to what commodities it requires. Obviously, the move to electric has opened up a range of commodities that weren't being used, say, 20 years ago or 30 years ago. Primarily lithium, obviously, for batteries, which I believe will be in a bull market. It has been in a bull market in 2015, 2016, that sort of period, and then the market went right down, and as you know, has come right back up again. I know that you don't believe that the lithium market is going to continue to go up.
Well, here's my thing about lithium is it had that bull market 2015, 2016, as you say, then it came off. Then literally from the COVID bottom for about 2 years, it had an extraordinary bull market. And the price of lithium carbonate kept on going up and up, even when the miners diverged and started coming off. From what my understanding of lithium is, there's a sort of, like, the first producers that can get the supply to market, there's a sort of arms race going on, but the first guy who gets it to market will win. It's not actually that hard to produce, and there's been some change in subsidies, change in regulations coming out of China, and I sort of, maybe it was about a month or 6 weeks ago, I put I think lithium has peaked price out, and it does seem to have come off since then, in fact since just before, but then I've noticed the last few days it's rallied a bit. But my question is, I wonder if the net zero narrative has maybe popped a little bit and people are realising...
It probably has. I think that, that is not as strong a thesis as it was. However, what I do see in the lithium market, which I think is very interesting, is that people like Tesla, companies like Tesla, they obviously have to have lithium in order to make their batteries. They recently went in with a company in Quebec, a lithium miner, Piedmont, I think they're called, in order to secure resources for their batteries. And there does seem to be quite a lot of this type of activity going on in the lithium. In lithium, in fact, I'm a shareholder in a company called Lithium Chile, which, although it sounds like it's in Chile, is mainly in Argentina. And they had a 19% stakeholder called Chengxi Lithium from China. Now, interestingly, the Canadian government, for better or for worse, but I think I'll know which side you're on, said that Changzhou had to divest from Lithium Chile, even though the company was not in Canada. It's listed in Canada. All its production is in Argentina, mainly a little bit in Chile. And they made Changzhou divest because they said this is a strategic mineral, and that they did not want Chinese companies investing in what they said was a Canadian company.
I must say, I'm surprised. Who said that? The Canadians or the Chinese?
No, the Canadians. The Canadian government. They've since divested Changzhou, and another investor has come in. But that's where we're sort of going with lithium. I'm
surprised, because Canada and China are normally pretty tight, and because of, if you go to Vancouver, there's loads of Chinese there, obvious reasons. West coast of China, east coast of China, west coast of Canada. So I'm surprised.
Yeah, I mean the company. I mean, I know the management. I've met with the management of the company. They were absolutely shocked. I mean, there were, I think, 6 companies, Lithium Chile being one of them. I mean, when the announcement came out, I think it was in October or November last year. They couldn't believe what they were hearing. I mean,
Surely China is the biggest buyer of Canadian raw materials.
It was exactly. It was absolutely shocking, and it didn't actually affect the share price. Interestingly, because it showed in a way that the Canadian government considered it to be a strategic asset, and therefore it almost looked good for the company that that what they were holding was an important reserve. But I think that's where we're going generally with commodities, and I think there's going to be, what I've noticed is that there's going to be a premium on lithium companies that are in the West, that are in, especially in America and in Canada. I think that there's countries are almost there's a bifurcation in the world. You've got the West, which is really Europe, America, China, Canada, Australia and Japan, and maybe Korea, and the rest of the world now. I mean, when you hear on the news the rest of the world doesn't like this, they're really talking about, or the world doesn't like something, they're really talking about the West. China and Russia have been pushed together for one reason or another. They're bringing with them companies like Brazil. India's probably coming on board as well, and you're getting this bifurcation in the world. So you're getting two separate world economies that are going to protect their own resources.
Yeah, I think that not resource nationalisation, but strategic resource. I don't even know what the word is. Siloing of resources, if you like. That's definitely going to be a big theme. There was a interesting document from Christine Lagarde of the IMF that was sort of translated by Isabella Kaminska, the former FT journalist, and she was describing this sort of strategic who gets what and who owns what, and Russia's got the resources.
Yeah,
it's got everything.
Exactly, and. But I think what the Ukraine war has shown also is that what came out recently, and I believe this is true, was that it's very difficult to actually properly sanction countries in terms of resources, because there's always a way around it. And it came out in the news, and I don't know whether you saw this, but it sounded like, and as I say, I haven't seen any evidence, and you probably won't be unable to see any evidence, but that Ukraine was buying oil from Russia.
During the war,
yeah, recently this came out. So you're looking at, you're seeing this way round the sanctions, and the rare earth market, which China again has said that they may restrict exports to the West, hasn't really had an effect on rare earth companies, because I think people realise that it's going to be very difficult to enforce these sanctions again. I mean, Europe's buying oil, I understand, from Russia through India or through third parties.
I read that as well. Yeah.
And it's almost impossible to effectively sanction these resources, I think. So I think that's something that has come out of this.
Governments might agree one thing, but people on the ground do something quite different.
Correct. I think that if oil is made available to countries, they will buy it wherever it's from. Obviously, they can't be seen to be sanction busting, but I think there's quite a lot of that going on.
Let's talk about rare earths, shall we? Next, another strategic. In other words, I own two lithium companies, by the way. One by accident, because it actually started out as a tin company, but they found loads of lithium, and it's sort of gradually rebranding as lithium. And then the other, because it's got a resource and it's going to be able to agree off-take agreements. So
can I ask the name of the
second one?
Yeah.
Vision Lithium.
Okay, and they're based in
Canada.
Okay.
Yeah, and they did a sort of bulk tonnage thing, bulk sample, and it's put out a good resource, a good PEA the other day. And I'm underwater with it. I bought it on my broker's advice, and it's come off since I bought it. But
right.
Anyway, those are the two that I own, and the tin mine is Andrada.
Right.
Do you know that one in Namibia?
Yeah, I have heard of that.
I like that one.
Yeah. Okay.
Tin's another strategic resource, and Myanmar. The Myanmar tin's just come offline, like yesterday. and the tin price has suddenly shot up 10%. I think Myanmar is like, I can't remember the exact figure, but like 20% of the world's tin or something. You're not a tin guy?
No, I haven't really looked into tin, to be honest. I mean, I know it's something that I probably should have, being in the resource market, but it's not something I've looked at in detail.
Okay, let's talk one I don't know anything about, rare earth.
Yeah.
Most of the mining's in China. Certainly the refining is in China.
Yeah, most of it. I mean, there's two sorts. There's heavy rare earths, light rare earths. The heavy rare earths, I think, are more used in for magnet technology, which is used a lot in weaponry. And the company that I think is very interesting is Lynas Rare Earths, which is based in Australia. They've been producing for a very long time. I believe they're the largest rare earth producers outside of China. And interestingly, the Pentagon has done a joint venture with them to build a rare earth facility in Texas, because they, I think, are worried that if China does restrict rare earth exports, they will be unable to make the weapons they want to make. Now, I understand that each F-35 plane requires 400 kilos of rare earths, which
seems a lot.
Yeah, it does seem a lot. I mean, I looked it up on the internet, and it's saying 970 pounds, which is the US. So, I mean, I know they need a lot, and I know that they're very important, and China does have a stranglehold on it. There's only one rare earth mine in the US called Mountain Pass in California, which is now producing. It used to belong to a company called Molycorp, which had a very checkered past. I think eventually went bust. Probably quite difficult to make a rare earth company in the West go bust, but I think they managed to do it. But they're now producing, and their shares have actually gone down since the rumor that China was going to maybe ban rare earth exports. So it's not that this announcement from China hasn't set the market on fire. Lynas has gone up somewhat since then, and their shares look very interesting. Their stock has come down a lot, but you would think that if, God forbid, hostilities did break out between China and America, that'd be the first thing the Chinese would do. They're not. I doubt they would allow rare earths to be sold to America that could help them make weapons.
How likely, stroke inevitable, do you think hostilities between China, that half of the world and this half of the world are?
I think that China will. I think there will be hostilities. Unfortunately, I think that the US has got a lot of bases around that area. They've been building up military bases around that area for several years. There's a film by John Pilger, The Coming War with China, which came out 2017, 2018. He's probably not one of your favourite journalists, but I think he's an exceptional journalist.
I don't know him.
John Pilger. He's an Australian journalist. He actually broke the story of in Cambodia, Year Zero. He was the first journalist on the ground in Phnom Penh when the banknotes were flying around the country, flying around the city, having the central bank having been looted by the Khmer Rouge. He made his name then, and he's written some amazing books. He's an incredible. He was in Vietnam. I mean, he's one of the journalists that I respect enormously as a truth teller. And this film, The Coming War on China, which was originally shown on ITV, has basically set out exactly what has happened since the film was made. He's under no illusions that the US is a global hegemon, will not accept the rise of any other country that's going to challenge that. They just will not have it. I mean, the Wolfowitz Doctrine, which came out in the 90s, specifically states that the US is the world hegemon. No one will challenge it, and if they do, they will probably fight them. Now, if you look at, say, Mearsheimer, I don't know if you know John Mearsheimer, he came out with, around the similar time, explaining this, but in terms of the Russia-Ukraine war, saying pretty much what Peel just said, that the US will not allow Russia to maintain an independent course. They will fight them through Ukraine, and they'll fight Russia to the last Ukrainian. Now, this was on video. It's been watched millions of times on YouTube. He knew exactly what was going to happen, and Pilger, I think, knows what's going to happen in terms of a conflict with China. Yeah.
When?
I have no idea.
I have no idea. Does Pilger say when?
No. There's no real time frame. But you look at Nancy Pelosi's visit to Taiwan, and I believe McCarthy's visit to Taiwan. You couldn't do anything that would wind the Chinese up more than doing what they did there, I don't believe, unless the president visited, but that's not going to happen. There does seem to be a desire to force China to make a decision on Taiwan, I believe.
The problem is, like, when you forecast a war between two great superpowers, I mean, sooner or later it's going to happen. But, you know, you kind of, like, at some point in the next 100 years, there's going to be some kind of showdown. It might just be this sort of war by proxy that seems to be going on anyway. But that kind of prediction is never wrong. Do you know what I mean? Because it's always going to happen at some point. But, I mean, let's say in the next 10 years?
I mean, I would have thought so if it's going to happen. I mean, it seems to be building up ahead of steam. I mean, obviously, since Pelosi's visit, the Chinese have ramped up flights across the line of demarcation, I believe it's called. And they've held military drills. There's only one way that this is going. There doesn't seem to be any attempt, as there is in Ukraine, to diffuse this. You know, in the 70s, when there was the Cold War, obviously, there was a word called détente, where there was an attempt to, by serious politicians, to diffuse situations that could lead to these wars. But that word just does not exist anymore. No one talks about peace. The Americans have got absolutely no interest in peace in the Ukraine, from what I understand. They want to degrade Russia. They want to fight Russia there and degrade its military. And as soon as the word peace is brought up, you're a Putin apologist. You know, that's not acceptable. Do you find that?
What concerns me is, throughout history, war has been used by leaders as a means to deal with domestic problems. So if you're an unpopular leader at home, there's nothing like an overseas war to save your leadership. And, you know, it worked beautifully for Margaret Thatcher, for example, with the Falklands. I mean, it's always a bit more nuanced than that, but, you know, there's many a king or an emperor or whatever who's gone to war overseas in order to dilute a problem at home. And I just see the West mired, it doesn't matter where you are, like mired in this cultural war and division and nobody able to get on, and left v right, and you just sort of think the solution for some leader at some point is just going to be, the only way he's going to resolve this is by creating something bigger. And I noticed that Macron, who is perhaps the most unpopular domestic leader of all of them, you know, the French are actually rioting, he's suddenly, you know, Mr. Missionary off to China and Russia and brokering a peace in Ukraine and yada yada.
Yeah.
And you wonder if that mentality is going on there.
Yeah, I have a different view of the culture wars, actually. They don't interest me particularly. I know that they do fascinate people who are interested in politics. I think that they are purely diversionary, I have to be honest. I think a lot of the culture war stuff is purely to take people's minds off what governments don't want people to talk about. And you know, we are nearer, there is no question about this, we are nearer a nuclear war than we have been probably since 1983, when Russia mistook, I think it was called Operation Able Archer, NATO's nuclear war games at the time for an attack, and we did come pretty close then. We are now as close, if not closer, to a nuclear war than we have been since then, definitely. Now, nobody talks about this. It's never mentioned. It's you almost, you can't talk about it. There's no forum for talking about it. Why are we determined to push on Ukraine all the time? Why? I mean, I understand that Russia has to be stopped, but and I think, and let me just say this outright: the Russian invasion is totally unacceptable. I have to say that. I mean, there's no question that what Putin did is utterly wrong, unacceptable, and what you don't hear in the West is the backstory to Ukraine since 2014, and since 2014 to the start of the war, 14,000 ethnic Russians were killed in the Donbass by Ukrainians. It's a civil war. The people in the Donbass that's part of Ukraine. They were killed by Ukrainians. This is a Ukrainian civil war. At the end of the day, we are involving ourselves in that. Should we be? And people say, look, next stop Poland. I don't see that, because I don't see Putin going, well, there's ethnic Russians in Warsaw. I don't see that. Crimea is ethnically Russian. The Donbass is ethnically Russian. That we are involving ourselves in what is essentially a Ukrainian civil war, I believe. I know we've drifted way off, but this is on my mind, and I really worry about where this now ends.
This is one of the reasons why I always like talking to investors, because what you tend to find with investors is that in order to make the decisions they make about where to put their money, they tend to be fairly well read on a wide variety of subjects. Now, you might disagree with their opinions on certain subjects, but you tend to find with investors, they know what's going on here. They tend to be politically informed. They just tend to know about a wide variety of things. So, yeah, I just thought I'd say that. But, I mean, I guess war is it's good for commodities.
Yeah, it's good for gold.
Where do you stand on uranium?
Uranium, I think, is going to be in a bull market. I'm not a massive bull. I think it's an interesting area. I do have investments in Yellowcake, which just holds uranium. It takes it off the market, and which I think is an interesting policy when there's a shortage or there's going to be a supply and demand imbalance. Sprott does a similar thing with silver. If you take this off the market, it will not be available for the demand side. However, there is a downside to it, because at some point, if the uranium price goes through the roof, which it could do in the next 5 years, there's a chance of that, then the governments will not allow companies like, say, Yellowcake, I would have thought, to be able to do what they're doing. It will then become a strategic asset, and they'll have to release their uranium onto the market.
But they'll compensate them for it, sure.
Yeah, they'd compensate, but sure. But I mean, as an investor, that's something that's at the back of your mind. I mean, whether they'd compensate them at the price of uranium at the time, who knows?
The problem I have with uranium is there's quite a few uranium companies, and there's uranium companies with genuine assets, genuine deposits, but they're so far from being a mine. They're like 20 years from being a mine, even haven't proven up these deposits, that realistically we're not going to see. So, the uranium price goes up, so the miners go up concomitantly, but they shouldn't necessarily, because I guess the value of their deposit goes up because of the uranium in the ground, but at the same time, they're not actually going to be any more profitable because they're so far from production. And a lot of the reason they're so far from production is just the sheer regulation of the cost of government involved in building a uranium mine. It fills people with terror. But there are other reasons as well. And so that's why I tend to steer clear of uranium mining companies. There's Cameco,
Yeah.
but then Cameco has its own problems, and you're taking on a lot of operational risk. So the solution is to own things like Yellowcake or the Uranium Participation Corp with the Toronto equivalent.
Yeah.
But then, it doesn't go up that much.
No,
and you're just literally, you're not speculating on human endeavour. You're speculating on asset price of appreciation.
Yeah, no, you are. I totally agree with what you're saying about uranium mining companies or pre-production mining companies. I'm involved in one called F3 it's in the Athabasca Basin, which is on the Saskatchewan border with the other huge Alberta.
Oh, okay.
Alberta. So it's a huge uranium mining area. And F3 Uranium have a big holding there. Their shares were about 8 cents. This was the start of this year. They very cleverly flew a plane extremely low over the areas that they were interested in with Geiger counters and equipment, and they found an enormous, they think it looks like a proper mine. An enormous amount of uranium is coming up on their testing equipment, and they even used the expression which I thought was brilliant in their in one of their press releases, which was off the charts, which I think actually comes from that from that type of testing, off the Geiger counter charts, if you like. And their shares have just gone absolutely mad. I didn't buy them at 8. I have to say I was severely underwater when they went there. But their shares went to 50 cents. They're back down to 35. But they do have a mine. But what you're saying is absolutely true, and that is, it takes years to develop this. I mean, if you find a rare toad or something, you push back. I don't know however many years. I mean, it's and this is it's in Canada, so the restrictions are, there's an enormous amount of red tape restrictions getting these mines online. But I do like these smaller companies, because you can, if they do have a find and they do look like they've got something, their shares do go up over time, even though they're not making a profit, and even though but it's not something that widows and orphans want to get involved with, to be honest.
I I do think it's a huge problem solver, uranium, on so many different levels, and I noticed that Jeremy Hunt or someone in the UK government has reclassified nuclear as green.
yeah, I saw that.
But I think in the ongoing move away from fossil fuels, uranium is obviously, particularly with the electrification of everything, uranium has to play a role.
Yeah.
And these small modular reactors seem to be a huge problem solver.
Yeah.
Because there isn't the problem that you have building. It's proven technology with subs that have been. Does a submarine sail? But subs that have been travelling around UK waters since forever, nuclear subs, and a small modular reactor would be not too dissimilar in size to a UK sub, I gather, and it would, like one small modular reactor the size would be enough to do a whole county, but then the problem is which companies have the wherewithal to supply them. And in this new geopolitical landscape in which we find ourselves, suddenly Chinese companies offering to build British infrastructure with something as sensitive as power, it's unlikely you're going to let a Chinese company do it. They tried to with Huawei, but then they went the other direction. So all this leads to Rolls-Royce.
Exactly what I was going to say. It's Rolls-Royce that are the ones that look like they've got these small modular reactors.
Yeah.
I mean, you're not going to have a lot of companies building these. They're pretty specific, and they're, I think there's huge barriers to entry. I think Rolls-Royce might have this market sewn up in the UK.
Yeah. But the problem is the other baggage that Rolls-Royce carries, and it's not a pure play and all the rest of it.
Yeah.
And I think Rolls-Royce is now between 140 and 150, something like that, having been at this level. Then it went back to about £1 or something, and then went back up again. But yeah, I mean, are you a great studier of accounts and books and debt and all this kind of thing? Is what Rolls-Royce is going to get from the small modular reactors enough to offset their other problems?
I don't know. I'm not a big reader of accounts. I do talk to people that are, but I'm not. I like themes. I like stories. But I think to come back to what you said originally, where nuclear power is going to be important is the base load. You cannot run an economy on wind. I mean, last summer, or even solar, you look at last summer, there's a company called Ørsted, who are the biggest wind turbine manufacturers in Denmark. They had in Europe, it was not very windy last summer. And therefore the amount of electricity that was created was not what they thought it should be. You can't run economies on whether it's going to be windy or not, or sunny. You can get some power from that, I believe, but you've got to have a base load for a fact you're going to get. Otherwise, you're literally putting your finger up in the wind because you don't know. That's why I think nuclear will become important, because there is no substitute for this base load and knowing how much you're going to get.
Yeah, it is important, but the problem is it's very hard to find a way to play it.
What the nuclear? Yeah.
We all know it's coming, but it's just hard to find the right vehicle for it.
The uranium. I mean, as we've discussed, the maybe through the uranium price and companies like Yellowcake who just benefit from the price and their shares sort of track it. You do get a little, their net asset value's fallen quite a bit below the price of uranium, but it will catch up, and that might be the purest play on this.
There's an idea called luxury opinions, which is espoused by a couple of guys, Christian Niemitz of the IEA, and there's a writer called Rob Henderson in America, who came from a very poor background, and he went to Harvard, or one of the big universities there, and noticed that your opinion, you don't get judged on your car or your nice clothes anymore in the way that maybe we did 20 or 30 years ago. Your opinions are what gives you status, and there are luxury opinions that rich people can afford to have. So you can be like massively pro-immigration, but the immigration doesn't necessarily affect you personally because the immigrants don't live where you live, for example. Or you can be massively pro some socialistic thing because it doesn't affect you. So there's this idea of luxury opinions. I think wind power is the sort of energy equivalent of luxury opinions.
Yeah. People like to say, "Oh, I'm a big believer in wind power," but it sounds good and it should be good. But we've got to run a huge economy here, and we can't do that, on luxury opinions, if you like. I don't know. I'm no expert on energy, but I do know that you've got to have a base load that is going to happen. You can't have a non-windy summer and tell people, I'm sorry, there's a power cut tonight. It wasn't windy enough on the West Coast, or there wasn't enough sun in Suffolk. This you can't. It's not going to work. But I do understand. Just to come to
there's also the hypocrisy of the metal required to build the wind turbine, the carbon neutrality of it, the damage to the environment, the damage to birds, the damage to the beauty of the environment. There's a lot of dodgy stuff.
Yeah, there is a lot of like these EV cars. I mean, what it takes to build them. I think that's coming home to roost somewhat.
Yeah.
And what you said earlier, is this whole green issue beginning to turn, and I think people do
100% it is. It was untouchable 10 years ago, and now people are pushing back against it.
I think once the facts are known, what it takes to build one of these cars, people are a little less
4 times as much metal in an electric car as in a And I still don't understand how keeping the car you already have is less environmentally friendly than buying a brand new one with all the shiny metal and everything that's involved in getting a new car to market.
Well, I totally agree. And I had a diesel car from 2008, which the government told me to buy because it was going to be the greenest. And then 10 years later, they told me I had to get rid of it because there's a ULEZ.
The same's coming with EVs. 100%. The same's coming. There'll be some scandal in 5 or 10 years' time, and they'll backtrack on it and they'll tax it, and everyone will be caught in the EV thing.
Yeah, absolutely.
100% it's coming.
I totally
even
agree.
more inevitable than war with China.
Well, I hope that is the case, and I very much hope I'm wrong. I mean, I'm not. I don't want to be some Cassandra sitting here going, I think there's going to be some mighty old war, but it does. It worries me. I've got children, and I do not want to see what I think might be coming down the road, and that does worry me.
Let's talk about gold and silver.
Yeah.
What do you think?
Well, the central banks of the world bought more gold last year than they have done since 1967. I believe there's a reason for that. And
mostly Asian banks.
Mostly Asian banks. Once the US sanctioned the Russian central bank and their dollar and all their dollar holdings, I think the writing was on the wall in terms of the dollar beginning to fall, which it has done last year, and for people to say, I want an alternative to dollars, and the yuan is not going to be a global currency in the next few years. It's just not that. I just don't see that happening. It doesn't have, as we discussed at lunch, I'm not even sure you can have a yuan account in the, people just, it's not a currency that people can hold. And I do believe that gold is something that investors in this time of real geopolitical uncertainty are beginning to look seriously at, and I think gold will do very well. If you look where it is in everyone starts talking about gold in dollars. Now, interestingly, dollars is one of the few currencies that gold has not made an all-time high in the last. Well, it has in the last year or so, but continually making all-time highs. I mean, you look at it in sterling now; it's £1,600 an ounce. Breeze through the 1500s. 1570 was the recent high. It's going to be what people may want to save in, especially with inflation rates where they are. I mean, the UK inflation rate came out today. It's 10.1%. It's
unbelievable. And what are interest rates? 3 or 4%?
Yeah, I mean, why wouldn't you look at something else? I mean, that would be my question. I mean, why would you want to put money in the bank and see it basically lose 10% of its purchasing power probably within a year? I mean, that's 10%.
Yeah, it's temporary. Inflation's temporary, Danny.
Transitory.
Transitory.
I mean, to come on to the Fed, I mean, now we're talking about them. Whatever they say will be wrong. I mean, just in terms of where we are with them.
Bailey's even more reliable than the Fed in that regard.
Who is?
Andrew Bailey.
Yeah, I mean, they just really... I mean, transitory inflation, obviously nonsense. They're now talking about a mild recession. Now, I will tell you one thing. There may not be a recession. There may be a massive recession, but there will not be a mild recession because that's what the Fed have forecast. So I don't know whether there will be one or there won't be one, but there will not be a mild one because they've got a track record. They just get absolutely everything wrong. I mean, it's incredible, these central bankers. And meanwhile, as you said before, to come back to gold, Eastern central banks are buying gold. I don't believe they're making a mistake. I think that they are the ones that know what's coming. They obviously now have the BRICS. They have the SCO, the Shanghai Cooperation Organization. They're in the process of forming a new currency. I mean, there's not much doubt about that. They're not saying we're going to de-dollarize, but we don't know what's coming. They're not stupid, these people.
The thing about a new currency is people seem to think it's something you can switch on tomorrow.
Yeah.
And I guess with something like a cryptocurrency, you can do that. You can design one fairly quickly and get it to market. The problem is the infrastructure around the new currency, the banking, the psychology of people, day-to-day usage and so on. It's not something that you can just switch on. And the fact that this de-dollarization, pro-goldification seems to be taking so long, it could be a sign that it's not happening, but it could be a sign that they're just taking it in baby steps. What I find quite interesting is the fact that central bank holdings, it's not just the fact that central banks have been buying large amounts, if you look at central bank holdings relative to other assets relative to dollars and so on, they have in the last couple of years turned up, and that's the first time that's happened since many decades. So even though central banks have been net buyers since 2008, I think was when the point they stopped being net sellers and became net buyers, it's the percentage of their holdings relative to other assets that is really telling, and that's turned up.
Yeah, no, I think that's right. And I think that the Chinese are letting their treasuries expire. They're not buying new ones. They're not dumping treasuries, because obviously that will put the price down, and they still own billions of dollars worth of them. But they see the writing on the wall. And if you look at China...
Their treasury holdings are down between 5 and 10% from the all-time high.
Yeah, which is significant. It's not massive, but they obviously need to also... They are the biggest holders of treasuries in the world. They don't want that market to... they don't want to sell so much into that market that they put the price down. Like, they don't want to buy so much gold that they put the price up either. But I think the gold discovery price is I think that is an issue in itself. And, there have been, as I'm sure you're aware, the bullion banks hold massive short positions in gold, on COMEX, in the gold market, the silver market. And there are lots of precious metal analysts who say, look, nothing's really going to happen until those bullion banks decide it's going to happen. I mean, especially in the silver market, which is a very small market.
But you day trade gold and silver, or gold,
yeah.
So you're staring at charts all the time. Do you have an eventual target for gold?
No, but I'll tell you what I do see, and not so much now, but in the last 10 years. Huge selling of gold at the most illiquid times in Asian trading at 3 a.m. in the morning. This in order to get the price down.
Yeah, but that could be a hedge fund.
That could be a hedge fund. It's unlikely. These bullion banks, they especially... I mean, if you look at the silver price, it's half... It's basically half of where it was from its all-time high.
Yeah.
It has reached 50...
It was $50, April 2011, and now it's 25. It's exactly
Does
half.
this seem right to you? I mean, in today's market...
It's silver.
It's silver, but you look at silver as well. What's interesting about silver is it's used in photovoltaic...
Yeah.
In the production of solar panels. You would have thought that alone would push the price up, and it's not only a monetary metal. I mean,
it's not a monetary metal. It used to be. It isn't anymore, and that's the problem that silver has. And it's an industrial metal. It's produced as a byproduct of mining other stuff. The mining companies that produce, I think the world's biggest silver producer is BHP, or it was a few years ago, and it's such a small portion of what it makes elsewhere. It just when it just offloads it.
Yeah.
It's I just think we. Because of silver's historical role of money, and in our psyche it has a role of money, but it hasn't had that role in England. It hasn't had that role for hundreds of years.
It has in China, interestingly.
Yes, well, and I know the words silver and money are interchangeable in whatever it is, 100 different languages around the world. I know. I was the most ardent silver bug.
Yeah.
But I just go. Just don't. But the money in silver is made selling it.
Yeah, no, I agree. I mean, that's where you make the money is shorting these. Is shorting these. I mean, when it gets to 30, if you shorted silver every time it got to $30 an ounce, you'd made a lot of money. At the moment, if you short it every time it gets to $25 an ounce, you'd be making money as well. I mean, it has gone above that recently, interestingly. But I just think, to come back to the precious metals, that we could be at the start of quite a big bull run. I really do. And interestingly, I do think that silver could, for once, live up to its hype and do something. But again,
at some point it will go to $50.
Yeah.
And if it ever goes through to $50, it will go to $200 or something stupid.
Yeah, I think that's probably right.
But if the historical average is 15-1, and so if there were 15 ounces of, and the gold price is 2,000, then the silver price should be, I can't even do the maths.
Yeah.
A lot in the hundreds.
Yeah.
Is what if it returned to historical average, but it's silver.
Yeah, no, exactly, and it's an enigma, and no one will be able to get their head around that market. It's very difficult.
Copper, base metals?
Yeah, I'm no expert on copper. Obviously, Dr. Copper, when when the world economy looks like it's booming and people are building, they need copper for every single electrical wiring that is produced. So, but again, it all comes back to how much supply is on the market. I don't know enough about copper to really to know, but I do believe. I mean, to come back to where we were, I think the IMF have said this, that we could be on the brink of a sort of global downturn. I think there has to be something in the pipeline. You don't have these sort of rate rises from virtually 0% up to 4 or 5% without there being a recession. Now, traditionally, it's taken 12 to 18 months for rate rises to filter into economies. We haven't reached that point yet. I think America, the US, I just don't think that they're going to get away without having a recession. I don't think we're going to get away without having a recession either. I mean, I look at my electricity bills and I just think, well, I'm just not going to go on that holiday I would have done, 2 years ago when, people over the country are in the same position as me. They're looking and thinking, I'm spending so much on energy, food. I don't have the disposable income that I had, say, 2 years ago.
No.
Before I've got to cut back on something, and I think people have less. They have less purchasing power, and that will filter down eventually. And I think that there will be recessions on the back of this inflation. I just don't see how we're going to get away with it.
You say that, you go out in London on a Saturday night, it's rammed.
Unbelievable. I was out yesterday in Covent Garden with a friend. We went to curry, one of the big curry houses at lunchtime. Couldn't get in. I mean, all the West End is packed out, and we said exactly that. And that was on a Tuesday lunchtime, never mind a Saturday night.
So you day trade the S&P 500 a lot. So you're presumably looking at day charts, weekly charts, monthly charts. Yeah. Do you have an outlook there?
Yeah, I do. I think that interestingly, the Silvergate Bank bankruptcy happened on the same day as the Bear Stearns bankruptcy in 2000, on the same weekend as the Bear Stearns bankruptcy in 2008. Bear with me on this one. After Bear Stearns went bankrupt in 2008, people were going, "Oh, that's not great." The S&P 500 went up 14.5% after that, before it crashed. Now we are seeing pretty similar chart patterns now to 2008. Obviously, Silvergate isn't Bear Stearns, but it was a big bank. S&P going up. Now, from what I understand, that market really is dependent on liquidity. And when Silvergate went bankrupt and the banks began to wobble, there's liquidity being put into these markets at the moment. There's no question about that. I mean, there's huge, apart from the fact that there's huge short positions on at the moment from hedge funds. There are short squeezes. It's pretty similar to 2008, I believe. It's not the same because nothing is ever the same, but we are, I think, going to be looking at the second half of this year. I don't think is going to be good for stock markets. I mean, they say sell in May and go away. I just see at the moment it looking fairly toppish. Since October last year, when the rally started, it's been, it's caught virtually everyone out. I mean, nobody thought that there would be a rally back up to 4,200 in the S&P after going to something like 3,500. But that, I think, this year, I think that they're going to find out that there's, bear markets might last a little bit longer than from January last year until whenever it was, in the 9 or 10 months. I just think that this is going to be looked upon maybe as a big bear market rally, or even a double top in the S&P, which got to 4,800. It's now at 41.5. It probably won't get up to 4,800, but I can see it retesting those lows that it made last year. Yeah.
Now, you were for many years involved in the property market in London and to the rest of the extent the UK. And we've grown up. We're kind of similar age. I'm 53. I'm guessing you're mid 50s, something, maybe a bit more.
57.
57. And so we've seen, you can probably remember the property crash of 89 to 94, the property crash, if you can call it a crash, in 2008. But basically, property has been the vehicle by which ordinary people have been able to get exposure to the incredible money supply growth of the last 30 or 40 years. So wouldn't it be wonderful if we had a currency that kept its purchasing power and you could save your salary in this money and it kept its purchasing power and yada, yada. But we don't have that money. We have money that loses 10, 15% of its purchasing power every year. So, and you look at new money supply growth and you look at mortgages and you look at the price, like property prices reflect new money supply growth. So they have been the means by which ordinary people they've been everyone's hedge.
Yeah.
And I don't think most people understand that. They just think that they bought their house and they were very clever because they bought well and it went up in value.
Don't we all think that when we do well?
Yeah, exactly. But, property prices reflect money supply growth. And that is why they have been so immune, particularly in London, to downturns, because money supply keeps on growing. Where do you see property markets going? Are you bearish? Are you bullish? I know you're mostly out of it now. I think you are, compared to where you were once upon a time.
Yeah.
Do you agree with my narrative about property as well?
Yeah, I do. I think you've got to split it really between commercial and residential. I think that what you're saying applies to people who bought houses, residential properties. I think the commercial property market is in for a bit of a rough time. I mean, you've got some of these funds, BlackRock, for example, gated commercial property redemptions, as have M&G, and some of their open-ended funds, not in all of them, but that's not a good sign. You've got negative growth in commercial property. Offices, because of work from home, I think the amount of demand is falling, and I think that there is quite a lot of supply. If you look at the American or the New York office market, there could be a real crash in commercial property. Yeah, I think that offices.
I keep reading this on all my WhatsApp chat groups. They particularly San Francisco is another one.
Yeah,
they haven't just not filled up.
No. I mean, it's changed. You see,
It's changed culture.
Yeah, it's changed the culture, especially young people. They just, they work from home. They can sit with their computer. They don't see any need for an office.
Yeah, my son's 22. He's just about to leave university. He wants to be a digital nomad. He's got no interest in going.
But people just not in. Why should I sit in a place with other people when I can do it, in Costa Rica or something, and work on the same hours as they do in America. This is the way young people think. I don't blame them. We're used to offices, I used to work in one. I don't know whether you did, but it's just our generation, and I think the young generation, I think the COVID lockdowns have exacerbated that, and I think that there's going to be a real problem, and I think that if you look today,
remotism is they went to school, their schools were remote, their universities were remote,
and that's the way it's going. If you look at Morgan Stanley, they came out with some figures, and they looked all right. But once people really delved into them, it looks like their commercial property lending book is looking very, very bad indeed. And they came out and said, we are worried.
Things like ULEZ is not going to help.
No,
congestion charge, just the sheer cost of commuting.
I ride a motorbike. I tried to get into Covent Garden yesterday. There is almost no way of driving from where I came from, North London, into Covent Garden. God knows how many tickets I'm going to get from going down roads that I'm not supposed to on my bike, but it's unbelievable. It's almost like they let you drive on some roads and the rest of them are shut in London. They're just endless. I don't understand.
Do you pay ULEZ for a bike?
No.
Would you pay ULEZ for an old bike?
No, you don't pay ULEZ or congestion charge on a motorbike. You don't pay anything at all. The congestion charge, that's.
It's 14 quid a day, ULEZ, 14 quid a day to drive your car.
It's absolutely
Imagine
outrageous.
if you're an old lady or something.
It's not. It's just. I don't just won't pay the congestion charge unless I really have to. I just think it's a complete con, and I go in on my bike, and if I go in, it's worth me taking a minicab from North London and not paying and not paying the congestion charge. It doesn't keep cars off the roads. It just means I'm going in a different car.
Yeah.
And not pay the congestion charge.
But you're going to pay. So you pay 14 quid to go in your car to the shops, if Ules has his way, in your old car.
Yeah.
And it's the poor, by the way, who don't upgrade their cars because they can't afford to. So you got to pay 14 quid to go to the shops in your car. You go, I'm not going to pay the 14 quid. It's another reason to use Amazon. But that affects the shop, which affects commercial property.
Yeah. Well, coming back to commercial property, I mean, you look at high streets. We've all walked up the high streets. I mean, even Hampstead, where I have an office, you've got shops shutting there that you would 5 years ago or 10 years ago it was thriving. There, 1 out of 3 or 4 shops is now shut in Hampstead.
Really?
Yeah, I mean this is a serious problem. 1
out of 3 or 4 shops in Hampstead?
Yeah, 1 out of 4 I would say in Hampstead.
What, in Shishi in the nice Hampstead town centre?
Yeah, they're completely. It's really beginning to show. I mean, you've got obviously the banks have left. I mean, you've got a massive NatWest. It's never been relet after it was vacated a year ago, and you have a lot of vacancies in Hampstead on the main, on the main part of Hampstead, which you would never saw 10 years ago. And the internet's decimated the retail business. Absolutely, the only commercial property that's done really well are the big box warehouses, well located, because companies need somewhere to store stuff before they ship it out, basically. And these big box warehouses the really, if you go up the M1 just before you get to the M6 junction, you've got the huge Amazon one, which is the biggest building I've ever seen in my life. And you've got all these massive warehouses up there. They go for serious money. The yields on them, they used to be, when I was working in the 90s, they were the sort of the warehousing with the sort of 9-10% rubbish, and now it's, you get Amazon in a warehouse, and this is serious yields now you're paying for that, 4-5%, and these things have that's where the people have made a lot of money out of commercial property.
But that's the same. That's where the money that would have gone into the high street's gone.
Yeah, exactly.
Okay, Danny, as we close, I know you're a Chelsea fan.
I am.
And you wanted to have a rant.
I do.
And so my son's a Chelsea fan.
I do. I am absolutely flabbergasted with what was going on at my club. I appreciate that, Abramovich was unable to... I understand the sanctions. I don't have a problem with that. I do have a problem, though, with this Clear Lake Capital coming in, paying, I can't even remember how it was, 3.5 billion, billions anyway, on an asset. Immediately they come in, the expertise at Chelsea, which centred around Petr Cech and Marina Granitskaya, they're gone immediately. So everyone at Chelsea knew they were the real brains, right? They're gone straight away. You think, right, they might replace them with some more expertise. Nothing. There is no replacement for the expertise behind the scenes at Chelsea. It was just, Bowley came in with his mate and goes, oh, I'm American, I know what I'm doing, I better run this. How much different can it be from owning the Dodgers, say? The guy has made catastrophic decision after catastrophic decision. We are now looking like a real second-rate Premier League team. I mean, I've got a season ticket at Chelsea. I missed the game at the weekend. I can't remember the last time I saw us score a goal at Stamford Bridge, never alone get a point. It is just absolutely... This time last year, we were World Club champions.
Yeah. Tuchel, he was a good manager.
Tuchel was a legend. He got
who would sack Tuchel?
Another catastrophic.
I can understand. Abramovich was too.
Yeah,
he wielded the knife, but there was always another great guy to come in.
Correct. I shouldn't say this, but I will. I had so little faith in the owners of this football club. I had £6 left in my betting account at the start of the season. And I'm not proud about this. And if any Chelsea fans are listening, it was a joke. It's £6, right? And I don't hope it happens, and it won't happen, and it's not going to happen. But I had £6 on Chelsea to get relegated at 2,500 to 1. Now, that is just a bit of a laugh, because I did it because it was so obvious that these people have got no idea what they're doing, and it is so frustrating to see my beloved club, who I've supported. I went to my first game in, I think, 1971. I was definitely at the League Cup final in 1972 because I cried when we lost to Stoke, and my dad said we would win. My dad is a Middlesbrough fan, and he said, "Don't worry, son, you'll be back at Wembley, you'll win a final." 25 years later, we were back at Wembley. We did win a final, and it was against his team, Middlesbrough. But anyway, and I'm just so upset about what's going on there, and having to watch really bad football. Who spends £600 million and does not buy a striker? I mean, who? How can you do that?
Nuts. Your buying is nuts. I grew up in Chelsea, and I grew up, well, my dad lived in Fulham, my mum lived in Chelsea, but I used to go to Chelsea. I think the first game of football I ever went to see was Chelsea. And Chelsea against Liverpool, and Peter Barota.
Yeah, great goalie.
And he had like his one brilliant game against Liverpool. He beat Liverpool. I was absolutely heartbroken. But you were sort of quite a glamorous club. But you were up and down from the first and second division at that time. Yeah. This would be early to mid 1980s.
Yeah.
And and then I think Kerry Dixon came along, and he was
Speedy and Dixon, and Nevin.
Yeah, and you were sort of glamorous club, and then suddenly something happened in the 90s. Matthew Harding, Glenn Hoddle, all that. You had the Glenn Hoddle and the Matthew Harding money, and suddenly Chelsea were playing. And then they just seemed to have had more and more capital come in. And then Abramovich. I remember when Abramovich bought you, I thought my friend was joking when he told me about this Russian billionaire who was buying Chelsea. But I mean, I watched you last night. You played Real Madrid last night. I actually thought you were good.
First half we were good, I have to say, but we cannot score a goal.
I know, but you had 2 or 3 chances.
Yeah.
Kante had a chance. The left back, Cucurella should have scored.
Yeah.
But then, and my son was just screaming, "Get out, strikers on! We got to have the." But then, as soon as you brought the strikers on, you couldn't get the ball.
No, I mean.
So at least you controlled the game the way. I thought you played well.
We did. There was a good atmosphere. I mean, it has been awful at Stamford Bridge, obviously, with the lack of goals, the lack of just anything going on, really. But there was a good atmosphere. I've had. And people say, the chances fell to Kante and Cucurella. It sort of sums us up. You want the and then meanwhile, halfway through the first half or whatever, it comes up on the scoreboard. Guess who scores? Giroud, another striker we got rid of, and we just go Tammy Abraham, Giroud. These strikers that why didn't we keep? We've ended up with nobody. I mean, what happened to Lukaku? I mean, he obviously just wasn't interested, but. We do have a problem.
Will he be playing for Inter in the Champions League tonight?
I don't know. I think he will be, actually. Yeah, apparently he's been appalling. They don't want him either. Apparently he'll be back at Chelsea next season. I mean, we should make him come back. We're still paying him. I mean, he's on loan. But whether he wants to perform... I mean, again, look at Aubameyang. I mean, we signed him. What happened to him? I mean, he's not even... we don't even see him. He never turns up. Why isn't he playing? He's a centre forward. Yeah. I don't understand what's going on. I feel sorry for Lampard. I mean, he's been dealt a really difficult hand here. But I really, really worry about long-term Chelsea now. I mean, you spend 600 million on the sort of...
They're going to go... Could they go bust?
I think they could. I mean, I hate to say that, but I don't see how you spend that sort of money... If we don't get back into the Champions League, I don't understand how we're going to... what do they do? Do they double down? Do they buy more strikers? I don't understand what they're going to do.
So what I'm taking out of this interview, Danny, is long gold, short Chelsea.
I wished it was long Chelsea and long gold, but I think that might be a good way of summing up.
Well, it's been great talking to you, and thanks very much for coming on. And do you want people to follow you? Is there a way people can learn more about you, or are you going to disappear into the?
I disappear into the ether. I'm not. You said about opinions before. I don't think that many people are too interested in my opinions. To be honest, I don't tweet. I don't do anything like that. I like reading other people's opinions, and I have my own.
Well, there are lots of people out there on the internet who are in a similar position, and thanks very much for talking to me. And I mean, these are difficult markets.
They are, and thank you very much for having me on.
My pleasure. And thank you, dear listener or dear viewer, for watching this show or listening to this show. And I'll be back with another interview on the Flying Frisbee very soon. Please subscribe to the channel. Until then, goodbye.